Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video I'm going to take you through the week ahead analysis video, highlight some news for the week and some charts of interest. So, going to kick it off with the news. We have a high volatility week, and what I mean by that is there is a lot of red letter or red folder data this week, including many central bank announcements. Now, the RBA are kicking things off with a potential 25 basis points move, with a move from 2.6% to 2.85%. This would be followed on then by, I think, which is the most important news this week, is the Federal Reserve. So the Federal Reserve are expected to hike rates by 75 basis points. However, there has been some headlines recently which suggest that the Federal Reserve could hike by less, maybe even 50 basis points, or what we could see is 75 basis points in this meeting, but in the next meeting we could see a move to 75 and then lower to 25, very much like what other central banks have been doing recently. If that was to occur, the dollar could be under some pressure, with the headlines that the Federal Reserve could slow the pace at which they tighten, has been met with some dollar weakness, so that could follow through into this week. We then have the Bank of England, who are looking to hike interest rates by 75 basis points. However, the Bank of England have gone through or the UK have gone through a transitional period, really, where we've seen a sort of continuous cycle of a new Prime Minister. But however, cable is actually trading up above the 116 handle, which we'll go take a look at in a second. And if the positivity continues and we do see a strong 75 basis points hike, with the Bank of England Governor Bailey speaking after, talking of potential further hikes, then that could keep the pound strong. We then finish the week with the non-farm payroll data. You can see here it's looking to bring in softer numbers. We have forecasts to see a drop from 263,000 to 200,000, and we're expected to see the unemployment rate rise. So, strength meter showing us this week that the pound is the strongest currency. We also have the euro, which is the second strongest currency, and what we can see is that the dollar has dropped off significantly, and we can see down here that we've got the yen, the Swiss, and the Australian dollar as our weaker currency. So really pound and euro flying, dollar weakening. However, we are seeing a few of these currencies now at reversal positions. So going on to pound then, what can we expect? Well, price is trading above these 115 highs, currently finding a little bit of support here at 115. So if we were to find support there and see a price break above these recent highs, we could assume that price is going to head towards the next level of resistance, which is the 118.25 handle. Alternatively, price could come back down to the 114 handle, find and retest these previous structure highs. If it does and buyers come back in, we can also see a potential move towards the 118.25 at that point. If we do see a significant breakout of this trendline resistance, though, we could expect even further price movements from the price of cable, depending on how it goes this week on a fundamental picture. Going on to the Kiwi US dollar then, so strength meters really pointed this one out to us. We've got the Kiwi being one of the stronger currencies last week, and then we've got US dollar being one of the weaker ones, and we can see that prices consolidated here. We broke out with a strong aggressive move. We closed above this previous swing high around about the 0 spot 58.06 handle. And what we saw was two really shallow closes on Thursday and Friday last week. So if price was to trade above the highs here at 58.72, I expect price to potentially go up to the next area of resistance at 0 spot 600. Going on to euro then, again, this is another pick from the strength meter. The euro, one of the stronger currencies, yen, one of the weaker currencies, and I noticed price was trading above 145 spot 50. Now, despite the Bank of Japan interventions, price has really failed to make any clear downside moves. In fact, price came back into the 144 highs and rejected, seeing price again close above the 145 spot 50 handle. So if price is going to remain in this sort of condition, we could expect a breakout move to the next level of resistance towards the 150 handle. Finally then, gold. So gold is quite an interesting market because despite the dollar weakness, we saw a little bit of selling coming in to the market on Friday, with price breaking through these structure lows through here, breaking through the counter trend line support, showing us that the potential for sellers are quite strong here. So I think if we were to see a move back towards the 1660 handle and a bearish rejection, we could expect prices to move lower, maybe perhaps into the 1620 handle. If price is at the 1620 handle ahead of the Federal Reserve move, then this could be an area where we do see buyers step back into the market. If price trades above 1675 this week, I think that would offer some longer term buying opportunities. We have kilos up here at 1700, or we have 1730 highs as an area of interest as well. So I'm going to leave it there. I hope you enjoyed this video update. If you did, leave this video a thumbs up, subscribe to the YouTube channel to see some more of our Forex trading content, and I'll speak to you in the next video.